All right, let's talk briefly today about options unraveling and options expiration, and also how that kind of overlaps sometimes with what we call core earnings season. So basically, every quarter in the first month of the new quarter, so January, for example, April, July, September, those are when the bulk of earnings are released for the prior quarter, right? So December ends, that's the end of Q4 for most companies. You got about a week or two to do your accounting, and then you hit what we call the biggest core 8 days of earnings, which in this particular year for January 2013 it's always from a Tuesday, so it was two days ago, Tuesday, January 15th, and you get a lot more earnings on the 15th, 16th, and 17th. And then Friday and Monday, you're sort of stuck in that middle ground where you've still got a lot of earnings to come out, even more next week realistically. So we call it the core 8 days of earnings. Friday and Monday don't show as many earnings, but you still get you're still in the middle of that season. And then next week, Tuesday, Wednesday, Thursday, those are by far the biggest days, ending. It typically ends with whatever day Microsoft is releasing on next Thursday after the bell. So those are the core 8 days of earnings. Why are those important days to pay attention to? Well, trading as a general concept can be very, very different during those core 8 days, especially the 6 days, the Tuesday, Wednesday, Thursday, the 2 weeks, because of all the earnings coming out. Because what happens is every morning is a reaction to earnings that came out both before the bell and after the bell the prior day, right? And so you got a lot of news-related movement out of the gate, in addition to whatever economic data you might have had during that time. And then a lot of times the rest of the day, the middle of the day, can be really boring until you get late in the session, when even sometimes down to the last hour before anything happens, when you basically have rumors start to fly about earnings who are releasing after the bell or the next morning, and those stocks start to move. Plus, keep in mind, a tech stock, a semiconductor, they may not have earnings till next week, but other semiconductors do today, and that affects the industry in general. So you've got a lot of stocks every day affected by releases, even if they're not releasing on their own. So we always talk about the core 8 days of earnings, because if you've been trading all quarter long, you kind of get in a groove or whatever, the core 8 days of earnings can really throw you off. They're different. It's a different environment. It really is. And it's subtle in some ways. A lot of traders don't get it until they've been through it a few times. So here we are the last couple of days. You got the core 8 days of earnings begun. And in this particular case, there haven't been a lot of shocks yet on any of these earnings. I mean, everything's come in fairly well in line. And because of that, as I pointed out earlier today, we've had a lot of days here, and really even though the core 8 days are Tuesday, Wednesday, and Thursday, and then next week, the reality is, what does that really mean? Well, what's a Monday, like this last Monday, going to look like when everybody's already waiting for the core 8 days to start, right? A little bit dull a lot of times in anticipation. So, here's the ES and 15-minute bars, and look at the pattern we were talking about. This was last Friday, right here, where my laser pointer is. Kind of moved down and then drifted up. That's a Friday. It doesn't have to be exciting. But why is it kind of like that? Well, probably because people are already gearing up for earnings, starting to wait for them. Monday, again, you're waiting for earnings to really begin the next day. Little gap down, little drift, and then we just drifted up. And same thing, right? Tuesday, finally had some earnings before the bell. Little gap down. A lot of earnings we're waiting on, though. They're all coming after the bell. And again, a drift up. Wednesday, small gap down, drift up. We basically spent 4 days in a row with the same opening area and closing area, or especially closing areas. We haven't gone anywhere. Very narrow ranges. All of that is really about the core 8 days of earnings, even though the core 8 days don't start till right here, the Tuesday. Monday's boring because you're in anticipation of it. Friday can be as well. Okay. Now, because they typically start, you get a week or two at the beginning of the month while they're doing the accounting, so the earnings don't start till mid-month. You also have to realize that somewhere around that week, somewhere during near the core 8 days of earnings, and sometimes it's right before, and then on occasion you don't see it as much anymore. It can be even right after the core 8 days, but more often than not, it's right in the middle. You get options expiration, right? So tomorrow, Friday the 18th, is options expiration. And as we know, a couple things happen with options expirations. First of all, Fridays are typically very boring. So the fact that we've got earnings due, we're in the middle of core earnings and everybody's waiting, Friday's going to be slow because you're going to be in that middle period between this week and next week's earnings. On top of it, you've got options expiration where the market's typically pegged. Okay, so we're stuck, and Friday's going to be even more boring because of that. And this time, add in the fact that Monday is the Martin Luther King holiday, so people are leaving early on Friday for the 3-day weekend. So in this particular case, what does tomorrow look like? Tomorrow looks like a complete sleeper in advance. We'll be here early. There's one economic number. We'll trade the first 90 minutes, and after that, probably crazy if you're trying to force much in the way of trading after that. Okay, Monday's a holiday, so in terms of the core 8 days of earnings, Friday's a joke, and Monday we're not even open, and then we're back to Tuesday, Wednesday, Thursday, and all the earnings, and we wrap it up. But that's how options can kind of get in the middle of it. Now let's think about options expiration happens every month, but only 4 times a year does options expiration turn into triple expiration, where you've got options expiration, the futures contracts, and the commodities all expiring. And that's not the same month as when the earnings releases are. So that's March, end of the quarter month, June, September, and December. Now, those expirations, because you've got a lot more expiring, the unravel process that we talk about, which occurs usually on the Wednesday, sometimes on the Thursday before the expiration, the unraveling process is usually the biggest one, the one where after that first hour's play, they start unwinding their option, closing them out because they've only got a couple days left, and they get ready to roll to the next quarter. So you really typically get a good options expiration unravel the Wednesday, or if it doesn't happen Wednesday, Thursday, of triple expiration months. There's only 4 of those. And again, those are not the same 4 months as you have the overlap with the core 8 days of earnings, because those are January, April, July, and October. So then you have the other months that we haven't mentioned yet, which is the middle ones like February, May, August. August can be slow just because of the summer doldrums, and November. Those months there's no core earnings report and there's no triple expiration. So you just have the options expiration to focus on. And those can have some decent moves from the options expiration in the unravel on Wednesday or Thursday. But what you have to realize is that the month of January, just like the month of April, just like the month of July, you don't have triple expiration. You just have single expiration. You've got a lot of stocks with earnings releases, and so sometimes that options movement, because there's not a lot of positions out there, the market gets a little flat, and you're still waiting for a lot of these earnings releases. You may not see the options unraveling move on Wednesday like we didn't yesterday. I would argue it wasn't. Yesterday was over here on this chart, right? Yesterday was really narrow. Now, if I extend this chart into today, so you can see today's action, which I hadn't done here originally. Okay, look at this. Now we finally got a move. It's interesting because if you take what is usually an options unraveling move, and we've highlighted those in the past, they usually start after the first hour's play, and once they start moving, they hold in that direction. We did see volume hold up for the next 30-45 minutes, and it was to the downside. So very unusual here to be on the rise after it looked like the options unraveling move was to the downside. But again, this is a single expiration. There might not be a ton of, they may be almost offsetting positions. There might not be a ton out there in terms of options to unwind. Okay, and what I think you're seeing here is people did hold these options. They didn't unravel on Wednesday. They held them to Thursday because we're in the middle of the core earnings. But maybe they are kind of doing it late today, and it's taking the market to the upside, because we all know that what happens tomorrow, most of the people are going to walk out and be gone, and nobody wants to sit around for an options expiration. But that's the relationship you have to think about, because again, the market is what the market is. There's a certain trading environment, but there are different periods. Just like the last week of the year is always slow, right? Just like the half day after Thanksgiving, the market's open, but that doesn't mean it's a good trading environment. It's open a half day, there's no volume, nobody shows up. Okay. Same thing is you have to understand what the core 8 days of earnings mean, and you also have to know what options expiration and unraveling mean. And there's there's 1 month in every quarter, the first month of the quarter, where options expiration is a single expiration that overlaps with with the core 8 days of earnings. And then there's 1 month a quarter where options expiration is a triple expiration, and that's the one where you're really likely to get those unraveling moves because so much is being undone. And then you've got that other middle month where you don't have the earnings in the way, so you might have a decent unraveling. But it's important to think about all that stuff, I think, because there's definitely a difference in the way the market behaves during earnings season and the pattern that you try to find in terms of options unraveling and expiration can sort of vary in that window.